We get you individual stock ideas from our fundamental and technical experts. So Dr. C.K. Narayan, going to start off with you. Which are the two stocks which are on your radar as we go into earnings season next week as well?
The first one that I would pick is something which came out with pretty decent numbers, which managed to make the street quite happy. That is Mahindra & Mahindra. I think it has seen a decent spurt during the week. So I would want to buy this on a pullback. I think there's great deal of upside momentum left in this stock. At 875, it had run into former resistances, so some amount of supply was fairly to be expected. But then the fact is that it is again, fresh challenges being mounted on that level, and I think it's only a matter of time before it will be exceeded. So a safer zone would be to buy somewhere around the 850, 840 region, keeping a stop at about 835. The alternative is in the event of no, let's say, pullback, then I would still want to buy this at a higher level on a clear breakout past 875. So both ways, whether on a breakout or on a pullback, I remain a buyer in Mahindra & Mahindra because I feel for traders you can look at about 920 to 940, but for short to medium term investors, I think you could look at somewhere around close to 990 to 1,000 rupees. The second stock that I have as a buy is Pantaloon Retail. Stock was in the thick of things a while ago, scaled up to about close to 200 rupees, and now it's traded down nicely in the market's slide to about 179 during this week. I think at this stage it has retraced back to a certain level where demand should be forthcoming, and I did see some evidence of it on Friday. So I would look to go long at the current levels around 180 and look to buy it into dips still about 175, keeping a stop loss beneath that, and would look for the stock to retrace all the way back to about 195 to 200 rupees within the next week or two.
Okay, watch out for M&M and Pantaloon Retail. Well, Mr. Chokkalingam, your two picks?
I would strongly recommend Clariant and MRF. Clariant is an MNC, Swiss-based company's subsidiary in India, and this is a zero-debt company, and it is very rare to find in Indian equity market any MNC offering very high dividend yield. It's providing around 4.5% dividend yield. In the recent run-up in the market, the stock has not participated much, and it's available at a one-year forward PE of 12, which is again very attractive for any MNC. And also it sells its chemicals to various user industries, well diversified user segments. So all these facts give us a lot of comfort. The second stock would be MRF. In fact, we have been positioning this stock as next M&M in terms of wealth creation in the next 10 years. Of course, in the next 6 months to 12 months, we are expecting around 20-25% upside. But in the long term, the stock, in a matter of 10 years, the stock can even move up to 40,000 rupees.
Okay, that sums it up with the 4 ideas that you need to watch out for come next week. Dr. Narayan as well as Mr. Chokkalingam, great having you with us on the show. Thanks very much for taking the time out and fielding off all those individual queries and giving us your top recommendations.